Petrochemicals company Sasol reported a 66% fall in full-year profit, mainly due to weaker chemical prices. Sasol opted to withhold its year-end dividend after its net debt of 73 billion rand and tough market conditions prompted its board to change its policy regarding shareholder payouts. The items weighing on profits were partially offset by the stronger rand oil price, improved refining margins, reduced total costs and higher sales volumes. For more on the numbers, we are joined by Sasol CEO Simon Baloyi. Simon, thank you so much for your time. I mean, you kicked off April 1st of this year. Between April and now, a lot has happened. Some analysts have said it has been a baptism of fire. And I'm going to start off by being cheeky here. Has it been a baptism of fire?
Thank you, Natasha. Not really. Not when you have 30,000 committed Sasolites who understands where we are, what we need to do in order to make sure that we steer the business to the right direction. So for me, I've actually been infused with energy to tackle this challenge because I know that I'm not tackling it alone, but with the whole Sasol complement.
All right. So with that said, let's talk about the background that you're dealing with. You're working with macro uncertainty, inflationary pressure, as well as operating constraints within the South African side. But take me through the period that was in terms of the operational side of things. How did you do?
Yeah, so operationally, let's talk about the volumes first, then we'll go into the earnings. So mining, we saw, an improvement year on year, 3%. Which is a welcome sight, at least from our mining business. Then the gas production from Mozambique, though, we saw a 6% improvement. Secunda operations, year on year, a 1% improvements on the volumes. And across our chemical value chains, both Chemicals Africa and International Chemicals, we saw a 2 to 3% volume improvement. However, our earnings were impacted by two things. Firstly was the macros. You saw that the macros, we mentioned the diesel differentials, the rand oil price, and the chemical prices, because we've seen these prices continue to remain weaker for longer. So that's where we are. But notwithstanding all of these challenges, we managed to produce the earnings in terms of EBITDA of 60 billion rand, which is 9%, lower than where we were last year. So overall, in terms of the controllables, I'm very pleased that the team could navigate the changes. Of course, the impairment of our U.S. assets, that impairment that came through, that was necessitated by us checking the carrying capacity. Remember, that's a new asset. We're checking the carrying capacity of that asset versus the value in use. And the value in use was significantly eroded by the long-term outlook of the ethane and ethylene margins. So it is the pricing issue that has played out there and has led to this outcome. However, as management, you've seen during my result announcements this morning, I said we're not standing still. We already started in April anyway to look at our international business and see how we can reset that business to be on par with its peers.
With that said, not standing still, I understand that you've also had to refocus strategy, change things here and there, and also identify focus areas in order for you to be able to unlock opportunity. Where are those focus areas and what does the strategy now look like?
Yeah, we did, start to evolve our strategy. And the first focus area was making sure that we can focus on full potential of our businesses. And this talks to making sure that we focus on actions to return the Secunda operation to its performance in the medium term of 7.6 million tons. Also in the mining business, we started putting initiatives there to maximize the sellable production tons of coal from that business. And we are busy with the reset in the chemical business, the international chemical business, and we will chat about it in November when we've got detailed metrics of what to do there. And what we did, we immediately streamlined the business. On the 1st of April, when I came in, we streamlined the business to make sure that we focus on the two pillars, strengthen and grow the foundation business and transform the business for the long-term future. And that necessitated that we work on the operating model. So we changed the operating model to focus our business in terms of Southern Africa and international chemicals, and then formed a new division called Business of the Future. That will help us on our transformation journey.
What's your sense of the regulatory environment? I mean, how are the engagements faring on that side? And perhaps in that response, you can touch in on what you're seeing from the Transnet side of things when we talk about supply chain constraints, etc.
Yeah, on the regulatory front, we all know whether you're talking about NASA or you're talking about air quality standards. South Africa has one of the most complex regulatory regime, but I'm happy to say Sasol is navigating that. We have good working relationships with everyone because our posture is the one of collaboration. We want to collaborate to make sure that we create value for ourselves, for our shareholders, for the communities that we operate in, and ultimately for the countries where we find ourselves in. And on the Transnet matter, we're working very, very closely actually with Transnet to make sure that the supply chain challenges that we face ourselves can be alleviated. And if you look at the year-on-year, we've seen improvement in both our mining and our ammonia rail, taking ammonia out of Secunda into our customers.
As we wrap up, what's the focus area, the main one, I suppose? There's a lot, but what's the key one between you and the rest of the team?
Yeah, our number one focus area is business performance. We must make sure our business perform to its full potential, because if you do that, we'll be able to maximize our free cash generation. With that, we can start deleveraging our balance sheet. Once the balance sheet is being deleveraged, we can return cash to shareholders, and we can start funding our transition and transformation.
All right, Simon, thank you so much for your time. That is Simon Baloyi, who is the CEO of Sasol. And as I mentioned there, it's been a steady drop, I suppose, in the performance of that share price today, down 0.8% in the morning to where it is down about nearly 5% or so.